You know what's interesting about precious metals? Most people think the biggest risk is the price going down, but there's something far more dangerous that almost nobody talks about until it's too late. Let me tell you about what happened to a guy named Robert in 2019. He'd been stacking silver for 15 years, had about 800 ounces stored in his home safe. Quality stuff too. American Eagles, Canadian Maples, some vintage bars. He did everything right. Bolted the safe to the floor. Had a security system. Never told anyone about his stack except his wife. One Tuesday afternoon, he came home from work to find his back door kicked in. The thieves knew exactly what they were looking for. They brought tools specifically designed to crack his safe. Took them less than 20 minutes. His entire stack, gone. 15 years of accumulation vanished in the time it takes to watch a sitcom. But here's the part that really hurt. His homeowner's insurance covered $2,500 in precious metals. That's it. His 800 ounces of silver, worth about $14,000 at the time, got him a check for $2,500. The insurance company's position was simple. If you want to store significant amounts of precious metals at home, you need a special rider, which Robert didn't have, because like most people, he didn't know he needed one. Now, I'm not telling you this story to scare you away from owning physical metals. Quite the opposite. Physical gold and silver are some of the most important assets you can own right now. But if you're going to hold them, you need to understand something critical. The security landscape has changed dramatically, and most people's storage strategies are stuck in the past. Let's talk about what's really happening out there. Home burglaries targeting precious metals have increased significantly over the past few years. And these aren't random break-ins. These are targeted operations. Professional thieves who know what they're looking for, where to look, and how to get it quickly. How do they know who to target? Social media is a goldmine for these people. Someone posts a picture of their new gold coin purchase. Someone else mentions their silver stack in a forum. Maybe you paid for metals with a credit card and that data got compromised in one of the countless data breaches happening constantly. Or maybe you simply told the wrong person at the wrong time. There's a guy who runs a precious metal security consulting firm, and he told me something chilling. He said the average home safe that people buy, the ones you can get at a big box store for a few $100s, can be opened by a professional in under 5 minutes. Some of them can be opened in under 60 seconds. These aren't Fort Knox. They're speed bumps. And it's not just home storage that's become problematic. Bank safety deposit boxes have their own issues. First, there's the access problem. Banks have limited hours. If there's a bank holiday, a financial crisis, or even just a local emergency, you can't get to your metals. During the 2008 financial crisis, some people couldn't access their safety deposit boxes for days because of bank closures and restrictions. Then there's the insurance issue. Most people assume their safety deposit box contents are insured by the bank. They're not. Banks explicitly disclaim responsibility for the contents of safety deposit boxes. If something happens, theft, fire, flood, or even the bank just losing track of your box, which has happened, you're on your own unless you have separate insurance. There's also the privacy concern. When you rent a safety deposit box, there's a record of it. The bank knows you have it. In certain scenarios, legal judgments, tax issues, government actions, that box can be accessed or even seized. It's happened before, and it'll happen again. But here's what really concerns me about the current situation. We're entering a period where precious metals ownership is becoming more mainstream. Central banks are buying gold at the fastest pace in decades. Retail demand is surging. More people are waking up to the importance of holding physical assets outside the banking system. That's good news for metals prices. But it also means more people are storing significant value in forms that are relatively easy to steal and impossible to trace. Gold and silver don't have serial numbers that matter. Once it's melted down, it's completely anonymous. That makes it incredibly attractive to thieves. Let me give you some numbers that should make you think. The average home burglary takes between 8 and 12 minutes. That's how long thieves spend in your house. They're not there to browse. They know what they want, and they know where people typically hide valuables. Under the bed, in the closet, in the master bedroom. These are the first places they look. Even if you think you've been clever with your hiding spot, you probably haven't. There are only so many places in a house to hide something heavy and valuable. Now, if you're storing metals at home, you might be thinking, well, I've got a good safe. I've got a security system. I'm careful about who I tell. That's better than nothing. But let's be realistic about what that actually protects you from. A security system alerts you or the police that someone's breaking in. But response times vary. In many areas, police response to a burglary alarm can be 15, 20, even 30 minutes. Remember, professional thieves can crack most home safes in under 5 minutes. They can be in and out before anyone arrives. And here's something most people don't consider. What if you're home when it happens? Home invasions targeting precious metals are becoming more common. Thieves know that if someone has significant metals, they probably have them in a safe. And they know the homeowner knows the combination. This is a scenario nobody wants to think about, but it's happening. There's also the insider threat. This is uncomfortable to talk about, but it's real. Most burglaries are committed by people who have some connection to the victim. A friend of a friend, someone who did work on your house, a relative who's struggling financially. The more people who know you have metals, the higher your risk. And in today's world, where everyone shares everything, keeping that information contained is harder than ever. So what's the solution? Well, there are really 3 main approaches, and each has its place depending on your situation. The first is upgraded home storage. If you're going to keep metals at home, you need to do it right. That means a serious safe, not a $500 box from a retail store, but a real safe that weighs at least 750 pounds, is properly anchored, and has a quality lock. You're looking at spending $2,000 to $5,000 minimum for something that provides actual security. You also need proper insurance, a special rider on your homeowner's policy that specifically covers precious metals at their full value. This typically costs about 1 to 2% of the insured value per year. You need to be strategic about placement. The safe shouldn't be visible from any window. It shouldn't be in an obvious location like the master bedroom. Some people put them in basements, others in closets in less used rooms. The key is making a thief work to find it, and making it impossible to remove quickly. You also need to think about fire protection. A regular safe won't protect metals from a house fire. Gold melts at about 1,050 degrees Fahrenheit, silver at about 1,160 degrees. House fires regularly exceed 1 to 100 degrees. You need a safe with a fire rating, and you need to understand what that rating actually means. But even with all of this, home storage has limitations. There's always some risk. You're always one determined thief, one house fire, one natural disaster away from losing everything. For some people, that risk is acceptable. For others, it's not. The second approach is professional vault storage. This is where you store your metals with a specialized precious metals depository. These are facilities specifically designed to store bullion. They have serious security, armed guards, surveillance, alarm systems, insurance, the works. Your metals are segregated, meaning they're specifically yours, not just part of a pool. You can visit and inspect them. You can take delivery whenever you want. The advantages are significant. Professional security that you couldn't replicate at home. Full insurance coverage. No risk of home burglary or fire. Complete privacy. Nobody knows you have metals stored there except you and the facility. And in many cases, if you're storing metals as part of a retirement account, this is actually required. Speaking of retirement accounts, here's something worth considering. If you have significant funds in a traditional IRA or 401k, you can actually hold physical gold and silver in those accounts. It's called a gold IRA, or precious metals IRA. The metals are held by a qualified custodian in a secure depository, but they're owned by your retirement account. You get the tax advantages of the IRA structure combined with the security and growth potential of physical metals. Now, this isn't for everyone. There are rules and requirements. You need to work with a specialized custodian. The metals have to meet certain purity standards. But if you're sitting on 6 figures or more in retirement accounts and you're concerned about the long-term stability of paper assets, it's worth understanding how this works. I've put together a detailed guide on gold IRAs, how they work, the rules, the costs, the pros and cons. It's in the description if you want to check it out. But back to storage strategies. The third approach is geographic diversification. This is where you don't put all your metals in one place. Maybe you keep some at home for immediate access. Maybe you keep some in a professional vault for long-term storage. Maybe you even consider international storage in a jurisdiction with strong property rights and political stability. The idea is that you're not vulnerable to any single point of failure. If something happens to your home, you haven't lost everything. If there's a problem with one storage facility, you have metals elsewhere. If there are capital controls or restrictions in one country, you have assets in another. This approach requires more planning and typically higher costs, but for people with significant holdings, it makes sense. You're essentially buying insurance through diversification. Now, let's talk about something that doesn't get discussed enough: The legal and regulatory environment around precious metals storage. This is changing, and not necessarily in ways that favor privacy and property rights. There's increasing pressure on precious metals dealers to report transactions. Cash purchases over $10,000 already require reporting. Some states have additional requirements. There's talk of lowering these thresholds or expanding reporting requirements. The government's position is that this is about preventing money laundering and tax evasion. But the effect is that it becomes harder to buy and store metals privately. There's also the question of what happens in a real crisis. History shows us that governments facing financial pressure sometimes take extreme measures. In 1933, the U.S. government literally confiscated privately held gold. Executive Order 6102 required citizens to turn in their gold coins, gold bullion, and gold certificates in exchange for paper money at a fixed price. Failure to comply was punishable by fine and imprisonment. Now, could something like that happen again? Most people say no. The circumstances are different. Gold isn't backing the currency anymore. The political environment is different, but the precedent exists. And in a severe enough crisis, governments do things that would have seemed unthinkable beforehand. This is why some people choose to store metals internationally. Jurisdictions like Switzerland, Singapore, and certain other countries have strong traditions of property rights and banking privacy. If you store metals there, they're outside the immediate reach of your home government. This isn't about doing anything illegal. You still have to report foreign assets and pay taxes. But it's about having assets in a place where they're less vulnerable to sudden policy changes. Of course, international storage has its own complexities. You need to trust the foreign jurisdiction. You need to understand the legal framework. You need to consider the logistics of accessing your metals if you need them. And you need to be comfortable with the costs, which are typically higher than domestic storage. Let me tell you about another guy, Michael. He took a different approach. He had about $200,000 in gold and silver. Instead of keeping it all in one place, he split it up. He kept about $20,000 worth at home in a quality safe, enough for emergency liquidity, but not so much that losing it would be catastrophic. He kept about $100,000 in a professional vault in the U.S., his main long-term holding, and he kept about $80,000 in a vault in Switzerland, his insurance policy against domestic instability. Was this overkill? Maybe. But Michael slept well at night. He knew that no single event could wipe out his entire precious metals position. He had immediate access through his home storage. He had secure long-term storage domestically. And he had an offshore position that was outside the U.S. financial and legal system. The costs were higher than if he'd just kept everything in one place, but he viewed it as insurance. And when you're talking about six figures in precious metals, spending an extra few $1,000s a year for proper security and diversification makes sense. Now, here's something else to consider. The insurance question. Whether you're storing at home or in a vault, you need to think carefully about insurance. Home insurance typically has very low limits on precious metals, often just a few $1,000s. If you want proper coverage, you need a special rider, and you need to be honest with your insurance company about what you have and where it is. Professional vault storage usually includes insurance, but you need to understand the terms. Is it full replacement value? Are there any exclusions? What's the claims process? Some facilities offer additional insurance options for an extra fee. It's worth understanding exactly what you're covered for. There's also the question of documentation. If you ever need to make an insurance claim, you'll need to prove what you had. That means keeping detailed records, receipts, photos, serial numbers if applicable, weight and purity documentation. Store these records separately from the metals themselves. If your house burns down with your metals and your documentation, you're going to have a hard time with your insurance claim. Let's talk about something that's becoming increasingly relevant. Digital security. If you buy metals online, if you store them in a vault with online account access, if you have documentation stored digitally, you need to think about cybersecurity. Your digital footprint can reveal information about your physical holdings. Use strong, unique passwords. Enable two-factor authentication. Be careful about what you post on social media. Don't discuss your holdings in public forums. Don't use your real name when discussing metals online. These might seem like paranoid measures, but information security is part of physical security in the modern world. There's also the estate planning aspect. What happens to your metals when you die? If they're hidden in your house and nobody knows about them, they might never be found. If they're in a vault and your heirs don't know about it, same problem. You need to have a plan for how your metals will be transferred to your heirs, and you need to make sure the right people have the necessary information. Some people use a letter of instruction that's kept with their will. Others use a trust structure. Some people simply make sure their spouse or adult children know where everything is and how to access it. The key is having a plan. Precious metals are meant to preserve wealth across generations, but that only works if the next generation can actually access them. Now let's address something that comes up a lot: the question of how much to store at home versus in a vault. There's no one-size-fits-all answer, but here's a framework that makes sense for a lot of people. Keep enough at home for immediate emergency needs. This might be a few ounces of gold, maybe 50 to 100 ounces of silver. Enough that if you need to access it quickly, middle of the night, weekend, holiday, whatever, you can. But not so much that losing it would be devastating. Keep your main long-term holdings in professional storage. This is your wealth preservation stack. The metals you're holding for years or decades. The stuff you're not planning to touch unless there's a major crisis or opportunity. This should be the bulk of your holdings if you have significant amounts. And if you have really substantial holdings, 6 figures or more, consider some international diversification. This is your insurance against domestic instability, currency crisis, or policy changes. It's the portion you hope you never need, but you're glad you have if things go sideways. The exact percentages depend on your situation. Someone with $50,000 in metals might keep $5,000 at home and $45,000 in a vault. Someone with $500,000 might keep $10,000 at home, $400,000 in a domestic vault, and $90,000 internationally. The principle is the same: immediate access, secure long-term storage, and geographic diversification. Here's something else that's important: the difference between allocated and unallocated storage. If you're using a vault, you need to understand this distinction. Allocated storage means specific bars or coins are assigned to you. They're segregated from everyone else's metals. You can visit and inspect them. You can take delivery of those exact pieces. Unallocated storage means you own a certain amount of metal, but not specific pieces. Your metals are pooled with other customers' metals. This is typically cheaper, but it comes with counterparty risk. If the storage facility has problems, you're an unsecured creditor. You might not get your metals back. For serious holdings, you want allocated storage. Yes, it costs more, but you're eliminating a major source of risk. Your metals are your metals, not just a claim on a pool of metal. There's also the question of what form to hold your metals in: coins versus bars, government-issued versus private mint, different sizes and denominations. This affects both storage and security. Coins are easier to store in a home safe because they're smaller. Bars are more efficient for large holdings in a vault because they have lower premiums. Government-issued coins like American Eagles or Canadian Maples are more recognizable and easier to sell, but they typically have higher premiums. Private mint bars and rounds have lower premiums, but might be harder to sell quickly. There's no perfect answer. It depends on your goals and situation. But here's what I want you to understand. The storage and security question isn't something you figure out after you buy metals. It's something you need to think about before, because the wrong storage strategy can turn a good investment into a disaster. I've seen people buy tens of thousands of dollars in metals and then realize they have nowhere secure to put them. I've seen people lose their entire stack to theft because they didn't take security seriously. I've seen people unable to access their metals when they needed them because they chose the wrong storage method. The time to figure this out is now, before you have a problem. If you already own metals, take a hard look at your current storage situation. Is it really secure? Is it properly insured? Do you have a backup plan? If something happened tomorrow, would you be okay? If you're planning to buy metals, factor storage costs and security into your decision. A $50,000 metals position might require $2,000 for a proper safe, $500 a year for insurance, and maybe $500 a year for vault storage if you're diversifying. That's real money, but it's the cost of doing this right. And here's the thing. The security landscape is only going to get more challenging. As more people buy metals, as prices rise, as economic uncertainty increases, the incentive for theft increases. The old approach of buying some gold coins and sticking them in a drawer isn't going to cut it anymore. You need to think like someone who's protecting a significant asset, because that's what you're doing. You need multiple layers of security. You need insurance. You need documentation. You need a plan for different scenarios. You need to think about both physical security and information security. This might sound like a lot of work. It is. But that's the price of holding real assets in an increasingly uncertain world. Paper assets are easy. They're just numbers in a computer. but they're also vulnerable to all the risks of the financial system. Physical metals are harder to store and protect, but they're also outside that system. That's their whole point. So here's what I want you to do. If you own precious metals, audit your current storage situation. Be honest about the risks. If you're storing everything at home in a basic safe, acknowledge that you're vulnerable. If you're using a safety deposit box, understand the limitations. If you're using a vault, make sure you understand the terms and that you have allocated storage. If you don't own metals yet, but you're thinking about it, make storage part of your plan from the beginning. Don't buy metals until you know where you're going to put them and how you're going to protect them. Factor the costs into your budget. Do it right from the start. And regardless of where you are in your metals journey, have a plan B. What if your primary storage location becomes unavailable? What if there's a fire, a flood, a theft? What if there are capital controls or restrictions? What if you need to access your metals quickly? Having a backup plan isn't paranoid. It's prudent. The whole point of owning physical precious metals is to have assets that are outside the financial system, that can't be inflated away, that will hold value when paper assets don't. But that only works if you can actually keep them secure and access them when you need them. Storage and security aren't afterthoughts. They're fundamental to the whole strategy. Look, I know this isn't the exciting part of precious metals investing. People want to talk about price predictions and market analysis. They want to hear about gold going to $5,000 or silver going to $100, and those conversations have their place. But none of that matters if you don't have a solid storage and security plan. The reality is that precious metals are both an investment and a responsibility. You're taking physical possession of valuable assets. That comes with obligations. You need to protect them. You need to insure them. You need to have a plan for different scenarios. You need to think about security, privacy, access, and succession. This is what separates successful precious metals investors from people who end up with horror stories. The successful ones take security seriously from day one. They invest in proper storage. They get proper insurance. They diversify their storage locations. They have backup plans. They think through the scenarios and prepare for them. The people with horror stories? They cut corners. They underestimated the risks. They thought it wouldn't happen to them. They learned expensive lessons about why security matters. Don't be that person. Take this seriously. Your metals are only as secure as your weakest link. A great safe doesn't help if everyone knows you have it. Professional vault storage doesn't help if you can't access it when you need it. Insurance doesn't help if you didn't get enough coverage or didn't document what you had. Think through your situation. Consider your holdings, your risk tolerance, your access needs, your budget. Then build a storage and security plan that makes sense for you. It might be all home storage with a great safe and proper insurance. It might be all vault storage for maximum security. It might be a combination. But whatever it is, do it intentionally and do it right. Because at the end of the day, precious metals are about protecting your wealth and your family's future. But they can only do that if they're still there when you need them. Security isn't optional, it's essential. Plan B isn't paranoid, it's prepared. And the time to figure this out is now, not after something goes wrong.